Hello everybody, this is Dave Osmond here at MetaStock. We are excited to have another great webinar, and we're really excited to bring somebody into the room here who's got some excellent experience, and I love the title of this particular webinar coming our way here in a few minutes. We're all about learning the secrets that no one wants to tell us. So I'm excited to have Andrew Keene in the room with us today. Before we start, and before I give an introduction to Andrew, I'd like to, of course, share our standard disclaimer. And if you don't mind, if you'll bear with me just a moment, I want to read this real quickly to appease the legal folk. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and it is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Okay. Well, I appreciate your patience there while we do that. Gonna go ahead and switch the screen over real quick. Bear with me just a moment. While I do that, let me just give a brief introduction here to our guest speaker, Andrew Keene. Many of you have heard of Andrew. You know, he's been a proprietary trader at the CBOE and graduated from Boda Capital's Clerk to Trade program. He's a market maker. And he's traded options on over 125 stocks, including some of the majors like Apple, GE, Goldman Sachs. And he's really a regular commentary voice nowadays on outlets like CNBC, Bloomberg Television, Fox News. He's written a book called Trade to Win Using Unusual Options Activity, Volatility, and Earnings. And we're very excited to have him in the room. I'm going to go ahead and turn the time right over to you, Andrew.
All right, how's everybody doing today? You guys can all hear me all right here, right? This is Seeker of the Market Makers. I will be your presenter today. At the end, I want to give you guys ample time to we'll do some Q&A at the end. If you have any questions about any stock specifically, I can bring up, my charts over here, and I can tell you if I think they're bullish or bearish. We saw some great trading today. I made money today personally in CP, Canadian Pacific. I made money in Tesoro today. I made money in Delta today. I made money in Vodafone. There are over 8,700 publicly traded stocks. Of those 8,700 publicly traded stocks, there's 4,200 stocks with options. Of those 4,200 stocks with options, there are about 320 that are weekly options. So I will literally trade everything, and we work with a proprietary scanner that shows me every single equity option trade across every single exchange, and then I'll put on a risk versus reward setup on basically any trade possible. So, half the time, I don't really care what a company does. I don't care the PE. All I watch is institutional order flow. So let's go through the secrets of the market maker, and I'll talk more about the institutional order flow. Feel free to ask any questions. This will be recorded for you guys. Keene on the Market is not a registered investment advisor, not registered with the SEC or any financial regulatory authority. I am not registered. I do not have a 7 or a 63. I am a professional trader. I trade 100% of my own capital on my own account. So my average P&L swings about $20,000 a day. Today I made $10,000. Yesterday I made about $22,000. Last Friday I lost about $26,000. So I'm a big active trader. Okay. Yesterday I traded close to 3,000 equity options. Today I traded about 1,200 equity options. Like I said, I had nice profits in some stocks, Tesoro, CP, Delta, and Vodafone. So about $7,000 profits between the four of those. Very, very active guys. I like to trade. I like to trade active. I like to get in and out of positions. I had a great trade on for Twitter. So I cannot give recommendations or advice at all, which is good because what I can do is offer my opinion, okay? I can offer my opinion, but I cannot give recommendations or advice. I'm not registered. I do not have any client money at all. I just trade on my own capital. So My name is Andrew Keene. I've been trading since I graduated from the University of Illinois, Champaign-Urbana. Had a finance degree and accounting minor. I had no idea what I wanted to do with my life. And my father said to me, I think you should trade. I was like, come on, Dad, those guys downtown with those yellow jackets on, they're all drunks, they're all do drugs, and they're so loud and obnoxious. He goes, to be honest, Andrew, I think that you'd really fit in there. I go, thanks, Dad. He said, you know, every single day is different. No day is the same. I always say I have to put out a fire every single day. How the futures were up today, and my biggest long position was down, okay? I'm long Chesapeake, and that's frustrating to me, okay? My biggest long position was down with the stock market being up, okay? That's frustrating, but I still managed to make some money today, so I was happy about that. I have been trading professionally for over a decade. Every single year I made more money than the year before. Unfortunately, I blew out my trading account in 2006. And I always say you're not a true trader till you trade out till you blow out a trading account. And I fortunately have not blown out my trading accounts for 8 years, and I'm now a consistently profitable trader. Every single year I made more money than the year before, to 2006, when I had a blowout in a company named AMAG, which is a pharmaceutical biotech stock. I lost over $490,000 in the course of about 16 weeks. And they are sharp little paper cuts, $30,000 a week for about 16 weeks. So it was painful and it was ugly, but I learned from my experience. Everything in life is either a lesson or a blessing. And that was a blessing because I left. I went to Asia, and I took some time off work. I spent 5 weeks in a Buddhist monastery teaching English, and I came back. I had $50,000 to my name. I said, I'm a good trader. I know I can make money. I'm going to take the last $50,000 to my name, and I'm going to trade. And if I lose this $50,000, I'm done. Cash in the chips. I'm going to have to get a job as a financial advisor, financial analyst, or something like that, but I know I can make money. And I turned that $50,000 into millions. I currently training students, from students to full-time traders. We have over 800 members at Keene on the Market. We have over close to 450 members of our live trading room. That is our most popular product. Today, I'm going to teach you secrets of a market maker. I'm sure you guys have seen me on TV. CNBC, Bloomberg, Fox Business, Sky Australia, BNN Canada, Sky Australia, WCIU. So I'm on all the networks, you know, and to be on the networks, you have to prove that you know what you're talking about and you're a profitable trader. And you have to know a lot about everything, because one time they said to me, coming from Chicago, independent oil trader Andrew Keene. And I didn't trade oil at all. And I was like, oh, well, I know enough about the oil market to make up something, okay? And that was with Aaron Burnett. So you have to be on the ball. Not anybody can get on TV. You have to prove a proven track record and a proven profitability in your trades. So we're going to go through the next one. This is the best time ever to trade equity options. Simple and easy, okay? There are 3 stages in a trader. Stage number 1 in a trader, unfortunately, is usually the worst stage of trading, but most people start there. You lose a bunch of money, okay? And I don't know why it is. It's market psychology. It's trading improperly. You know, your brain tells you to buy stocks as they go lower and sell them as they go higher. Unfortunately, this is the improper way to trade. You should be buying stocks as they go up, and you should be selling them as they go down. Currently, right now, in all those growth stocks, pick one. Google, Priceline, Facebook, Twitter, Yelp. I would not be long on these stocks. Pandora, price action, price momentum tells me all these stocks are going lower, okay? So we want to be buying as they go higher. I want to be selling them as they go lower. This is the best time to trade options for one of 3 reasons. Reason number 1, the markets are tighter than ever. I follow, and I'm a study of option trading. I can't tell you how many books or how many DVDs I have personally watched throughout my lifetime. Lawrence McMillan was one of the greatest educators in our time. Used to tell, you know, give seminars, and he'd say the market and the options are 5 bid at 570. If I buy them for 570, the stock has to move $4 for me to actually break even. And that's unbelievable, because the markets nowadays are, you watch Facebook trade, 78 cents at 80 cents. I can get in and out of position without giving up any theoretical edge. Can you imagine going to Vegas and not paying, you know, the edge to the dealer? Everybody likes to play, you know, all the games, the table games as they call them. roulette, blackjack, craps. I don't play any of those games. I play Texas Hold'em. Okay, why do I play Texas Hold'em? I actually play Omaha, but why do I play poker? Because I'm playing against another component, except instead of playing against the house. You guys have all heard about Michael Lewis's HFT book, right? Why would you guys want to trade against the house? Okay, why would you want to trade against the HFTs? The HFTs are always going to win. Okay, if you are trading stocks, futures, or forex, you are never going to win it in the long run. And this is I compare this to playing chess or checkers. If you play the computer in chess or checkers, you will never ever win, because there's always a mathematical right move to make. And this is how the HFTs trade. However, trading the option market, there is a bluffing mechanism involved, because you never know a trader's stock position on against their options. I personally watch over 12 to 1,500 trades go across the tape every single day from the equity option trading floors. So I watch the order flow straight from the trading floors. I've taken 1,000% profits on SYY, AER. Within the last week, I made over $25,000, I think $23,000 in MPC. So I take institutional order flow, otherwise known as paper. And what is paper? Paper is an order from a hedge fund, mutual fund, retail bank, or big trader. So I watch institutional order flow all day long, and I allocate my capital. You know, if an institution is going in to buy a bunch of calls, I think the chart looks good, I will go buy calls with them. If they're selling calls, that's my signal to get out of it, okay? And this is proven to be profitable over time. Wish I could pull up my account here. I started my trading account this year with $220,000. My trading account right now, before commissions, is around $500,000. So I'm up $280,000. This is all my own money before commissions. This quarter, I'm up over $70,000 this quarter before commissions, okay? So I'm a very active, profitable trader, and I'm going to teach you guys what a market maker does and how we can use this and start taking money from a market maker. So the markets are very tight and more liquid than ever. Let's talk about a market maker, who a market maker is. A market maker is someone, A market maker is someone who is willing to make a market on an option. I can hear some noise in the background. Is that your machine? No noise. Okay, I don't know where the noise is coming from, but maybe it's my machine. Sorry about that. Okay, so a market maker is someone who is willing to make a market on a particular option, okay? Let's say Apple's trading $590. The market maker would be 25 bid at 25.30, 20 up. What does this mean? That means the market maker is willing to buy 20 of the December 650 calls for $25, or they're willing to sell 20 of those exact same calls for $25.30. And you say to yourself, why would someone put a bid and an offer? Why wouldn't they just be a buyer or a seller? The market maker is there to make money. That is their profit margin. They're trying to buy the bid and sell the offer, okay? Think of a currency exchange, and I'm going to compare a market maker to 3 separate individual businesses to help you guys understand what a market maker does, and then we're going to talk about it. We're going to flip the script on the market maker, and we're going to talk about how we can profit from them, and I'm going to teach you one of my trading plans here today. So a market maker is similar to a currency exchange. If you think of a currency exchange, where is a currency exchange? A currency exchange is at an airport. At the airport, the currency exchange is always and a currency exchange, they're always willing to buy or sell euros. Let's say you're going to Spain. You want to get off the plane in Spain. You want to buy yourself a latte and a croissant. You want to take your US dollars and you want to convert it to euros. You might go to the currency exchange. Say, hey, man, I got $100 US. How many euros can I get? He'll say, I'll give you 130 euros. Then you got a buddy that's coming from Spain to the United States. He goes to the exact same currency exchange. He says, I have 140 euros. how much US dollars can I get? And they say, we'll give you 100 US dollars. So what did the currency exchange just do? Well, they just made 10 euro profit. By buying the bid, selling the offer, the currency exchange can make profit, okay? If a market maker bought the bid and sold the offer 20 times, that'd be $600 profit. Every option is 100 shares of stock. They now have minis and they have jumbos, but every option is 100 shares of stock, so it'd be 100 times 30 times 20. So one way the market maker makes money is on the bid-ask spread. The second way a market maker can make money is on implied volatility, okay? In general, institutions, okay? And we talk about institutions all the time because this is who I want to mimic. Who are the institutions? Institutions are hedge funds, mutual funds, pension funds, sovereign wealth funds, big banks, and big traders. In general, they are always long options. If they are long options, that means the market maker is usually short options. We used to have something on the trading floor when we said, when in doubt, hands out. What does that mean? The best traders that I knew made money by being short implied volatility. Okay, and we can think of this as, you know, a couple of different things. And one, the way I like to think of it is a jersey store. At the beginning of the year, okay, a jersey store will buy jerseys of every single player in the NBA. They know they're going to sell all their LeBron James jersey, but they don't know what other jerseys are going to sell. So maybe they'll buy some Dwight Howard Laker jerseys. Maybe they'll buy some Jeremy Lin Knick jerseys. Well, what happens? Dwight Howard leaves the Lakers and goes to the Rockets. What happens to the price of those jerseys? Those go down in value. So the market maker cannot control order flow. They are not the ones that control order flow. Institutions control order flow. Just like the jersey store can't control who gets injured. And I'm sure you guys all have had losing positions before. I have a lot of losing positions. It doesn't matter how many losing positions you have. All it matters is net profitability. And let me tell you why. I was in a money show in New York and I was presenting at a conference. Some guy raised his hand. He said, Andrew, what percentage of your trades are winners? I looked him straight in the eye and I said, you know what? It doesn't matter. And he say, that's the craziest thing you've ever said. What do you mean that doesn't matter? I go, simple and easy. Let's look at this, sir. We have 5 trades on. I'm risking $1,000 per trade. Trade number 1, I lose $1,000. Trade number 2, I lose $1,000. Trade number 3, I lose $1,000. Hey, what? Trade number 4, I lost another $1,000. So now I have 4 trades on, and I've lost $1,000 per trade. Trade number 5, I hit a triple on, let's say, and I make $10,000 profit. Okay, so I made $10,000 profit, and I lost $4,000. 10,000 minus 4,000 is a net profitability of $6,000 in profit. If you looked at how many trades I made money on, how many trades I lost money on, I made money on 1 trade. I lost money on 4 trades. So in theory, only 20% of my trades would be winners. However, I was a net profitable trader, okay? And this is how I look at stuff all the time. Not every single one of my trades is going to be winners, but it's more important of how I manage trades, okay? I know you guys all have had losing positions before. Who hasn't had a losing position? How do you handle that losing position is a lot more important. Do you sit there and stare at it? We've all had losing positions. You start staring at it, and then you stare at it again, and then maybe you go for a walk. Then you come back and you think about adding to it, and then you start cheering it on, okay? That's not the proper way to trade. Just like in the jersey store, you can't control who gets injured or not. You can't control if your trade's going to make money or not. And the difference between a good trader and a great trader are good traders think about how much money they can make. I consider myself a great trader. I think about how much money I can lose before I put any position on. So the second way a market maker can make money as implied volatility goes lower. In general, options are overpriced. Most out-of-the-money options go to 0. So the market maker wants to be short options, and they make money when the implied volatility goes down. And this is the second way the market maker makes money. Once we look at the third way the market maker makes money, we can talk about how we can put on a trading plan and start to take money from the market maker. So the third way the market maker can make money is on time decay. So the first way was on a currency exchange, buying the bid, selling the offer. The second way was through implied volatility. The third way is on time decay. Everybody in life has insurance in some form of imagination, okay? Car insurance, health insurance, dental insurance, life insurance, jewelry policy, condo, car. Everybody has insurance, okay? The market maker acts as their insurance company, okay? Out of the money options, decay away. That means every single day that the stock does not move, they will have a decaying mechanism. You can say that, compare that to car insurance, okay? I know I pay $1,200 a year for my car insurance. I could break that down a little bit more and say, hey, I actually pay $100 a month for my car insurance. Or I could break it down even more and say I pay $3.33 a day for my car insurance. If I wanted to break it down even further, I could say I pay about 14 cents an hour for my car insurance. So the market maker will make money if they're short options. If you're short options, you're short gamma, you're short vega, and you're long theta. If you guys want to know how much your option is going to decay, there's a standard equation that I'm going to teach you, and I'm going to tell you right now. What you do is you look at the out of the money option. Let's say XYZ is trading $30. XYZ is trading $30, and I'm long the 33 calls. So they're the out of the money calls. If there are 20 DTE, days until expiration, that option will decrease in value 5 cents every single day that the stock doesn't move in your direction, okay? So you can take the price of the option, you can divide it by how much time till expiration, and that is how much the option should decrease on a daily basis. Obviously, it's not this linear and it's not this easy, but this is a good generalization you guys should always look at. You know, I get emails all the time. My stock went up in value, but my calls went down in value. This is a scam. I can't believe it, okay? And that's not exactly true. You guys got to understand that the market maker is making money in ways you don't know. So now we have the three ways the market maker makes money. They make money on number one, the bid offer spread, just like a currency exchange. They make money on the second one, which is implied volatility. If implied volatility goes lower, they will make money as well. And number three, the market maker will make money on time decay. So, sounds easy. Sounds like a great business to be in. Is it really that easy to become a market maker? And throughout any presentation I talk about 90%. And what is 90%? 90% of all traders lose money trading. Simple and easy. Let's say there's 100 people in here right now. Only 10 of you would actually become a profitable trader. And why is this? Because you guys are setting up improper risk versus reward setups. Your education is not on the level that you need it to be. Okay, you guys have all taken an hour out of your day to listen to my presentation. So you should give yourself a pat on the back. You need to be willing to invest in your education, okay, if you're willing to be a successful, profitable trader. When I was clerking, I did a clerk to trade program with BOTA Capital Management. BOTTA stood for Best Option Traders There Are. No joke. That's what they named their company. 100 traders there, and they were the best traders I've ever met. To this day, they were the best traders I knew. Every single day, we had class. At the end of the day, we had mock trading. Then once a week, we had tests. Out of the 14 of us, we even had a guy who went to Harvard. Not Hartford. He went to Harvard, okay? Out of the 14 of us, only 3 of us got the opportunity to trade. To this day, there's only 2 of us still trading. It's me and my buddy that owns a hedge fund, and only 2 of us are trading out of those 14 market makers. So trading is very, very difficult. Even if you get trained properly, you guys got to look at everything. And I'm here to teach you my trading plan, or one of my trading plans, so you can start becoming a consistent, profitable trader. If you guys are sitting there trying to hit that home run every time, you're never going to make money. My goal is to hit single, maybe hit a double, maybe hit a homer every 10 games or so, okay? Just hitting singles will always keep me in the game. So the market maker makes money off you, but you don't even realize how. They do this in one of three ways. They make money off you by the bid offer spread. They make money off you on implied volatility changes, and they make money on time decay. A market maker does not care about running a stop. I never knew when a customer had a stop in place. I personally have never used a stop for an option ever before. I didn't even know there was stops until someone told me a couple of years ago. So simple and easy. This is the three ways the market maker makes money. We need to fight back, and I'm going to teach you guys how. I will teach you the ways to take money from the market maker like me. It's simple and profitable. This is a picture of me straight from the trading floor. I was down there for over a decade. I can only find one picture of me from the trading floor, and that is me on the right. If you want confidence for you, the CEO of the Chicago Board Options Exchange, his name is Ed Tilley, personally backed me with his own money for about 3 years, okay? So Ed Tilley is now CEO of the CBOE, and he personally backed me with his own money for about 3 years. And then he took a position at the CBOE where he couldn't back me anymore, okay? He was a partner at one of my old firms. He said, I know how good of a trader you are. I'll back you with my own money. He only backed me and one other guy. And then, you know, we had great years. And I made millions of dollars trading, okay? And I want to teach you guys. When I was younger and I was 25, I used to always say, whoever teaches, they teach because they can't do. Well, now that I'm older and I'm almost 35 this summer, I completely disagree with that statement. I know if I do not teach people how to properly trade, then I'm doing a disservice to the industry, okay? I will show my P&L any customer anytime they ask. Any single second of the day, any trade you want to see, I'll show you my fills. Okay, I'm not registered, so I can show you my fills. I can do whatever. I can do things. I can give my opinions of stocks. Okay, so basically simple and easy. You want my P&L? I'll show you my P&L. You want to see where I got in a position, where I got out of position? I'll show you anything you guys want. I give all of my subscribers my entries and exits 3 times a day. So I'm going to teach you guys the way to take money from the market maker. This is called market maker targets. And this is where you guys got to really pay attention, okay? I'm going to teach you guys something that's so simple and so easy, but yet so profitable. I use this strategy every single day, every single earnings event, and catalyst events, okay? If you want to trade the Fed meeting, you can trade this. If you trade options at all, you should know about market maker targets. So how to develop price targets. Many use technical indicators such as Fibonacci levels and wave patterns, but there is a much more accurate and effective way to do this. We look at the option market and we calculate how much the market maker move, okay? We know market maker, how they make money. Let's flip the script and start taking money from them. This is known as the market maker move. I used to use this all the time on the trading floor. We calculate this by calculating the measured move target on the at the money straddle. Okay, if you guys don't know what an at the money straddle is, I'm going to go through a couple examples here. An at the money straddle, and we're not talking about buying straddles here, guys. We're talking about using the straddle to figure out how much a stock can move on earnings, okay? So using straddles to my advantage. A long straddle is an at the money call, at the money put, same strike, same expiration. So at the money call, at the money put, same strike and same expiration. If I was to buy the straddle, my advantages, I have unlimited reward. Anytime you buy calls or buy stock, you in theory have unlimited reward. My disadvantage is it's expensive. I have to pay the risk premium. Maximum risk is the amount that I pay. Maximum reward is unlimited. Break even is the strike price plus the straddle price, and the strike price minus the straddle price, okay? And I'm going to go over one example, and then I'll talk about even Twitter, guys, and how I put on a position in Twitter, and if Twitter closes exactly where it's trading right now, how it will profit 300% profit in Twitter in the course of 2 days. So let's talk about the market maker target. We always have 2 quote-unquote measured move targets. we have an upside measure move target, and then we have a downside measure move target. Our upside measure move target is calculated by the straddle price plus strike price. Straddle price plus strike price. And you guys can use this for any option market you trade. If you trade currency options, if you trade commodity options, if you trade future options, you can use this for anything you want. Look at that at the money straddle and figure out 2 price targets, and then you can place your trade accordingly by where you think the stock's going to go. A stock can move one of 7 different directions. It can move parabolic higher. It can move on a 45-degree angle higher. It can move on a 15-degree angle higher. It can be dead flat. It can be moved down on a 15-degree angle. It can move down on a 45-degree angle. And it can go parabolic lower. But using the straddle price will give you the most accurate target of where a stock can move within a given period of time. So we have 2 quote-unquote measured move targets, an upside measure move target and a downside measure move target. Me and James, which is my other trader, we spend 2 hours a day going over earnings trades. And we use these measured move targets every single earnings trades we put on, okay? So in general, the shorter the time period to expiration, the more accurate these targets are. So I'll use this for anything, okay? I prefer to trade the weekly options. If not, I might have to trade the front month options, which are the May options. But if it has weekly options, that is the best choice to have, okay? So a trader can use this method in any option market for any catalyst event. Let's look at SWKS. And this is an actual trade I put my own capital at work on, and I made 500% profits in Tuesday to Friday. So Wednesday, Thursday, Friday. 3 trading days. And I'll talk about my trade in Twitter. In Twitter, I'm going to profit 300% in the course of 3 trading days. So in SWKS, the stock was reporting earnings. And this works really well on catalyst-driven events. What are catalyst-driven events? Biotech announcements and earnings. So SWKS was reporting earnings. The at-the-money straddle was $4, which means at-the-money call, at-the-money put. The 37 call, 37 put added up to $4 total. So they're implying the stock could move either up to 41 or down to 33. I picked a bullish direction for 3 reasons. Number 1, okay, the chart looked very strong. Number 2, the stock has rallied 6 of 8 quarters on earnings. And number 3, we saw institutional order flow to the bullish side. So that's 3 reasons I decided to get long. But when I'm trading, I always want to have a proper risk versus reward setup. So these are our 2 measured move targets, 41 and 33. So let's place a trade where I make maximum profit if the stock trades $41. So I guess I made 400% profits in 2 days here. SWKS, I bought the 39, 41, 43 call butterfly for 38-cent debit. On this trade, I bought the 39s, I sold 2 of the 41s, and I bought the 43s for a 38-cent debit. My risk on this trade was $38 per one lot. My reward on this trade, in theory, if the stock closes right at 41, which is exactly our measured move target, it would be worth $2 minus the $38 that I paid for it, or $162 profit. I closed this position out at $1.55 credit to me, or $1.17 profit, 400% profit in 4 trading days. Actually, I think it was Tuesday to Friday, so Wednesday, Thursday, Friday, 3 trading days. I had a trade in Twitter, and I put this trade on in Twitter. Very, very similar situation. Twitter was trading $43.50. The at-the-money weekly straddle, at-the-money call, at-the-money put, was priced at $6, okay? So Twitter was trading 43.5. The at-the-money call, at-the-money price, put was priced at $6. They were implying measured move targets, either to the upside or the downside of $6. Measured move target to the upside, 49.50. Measured move target to the downside, 37.50. I put on a bearish trade for Twitter for 2 reasons. Last time the stock sold off on earnings. And also the chart looks very weak. So my trade in Twitter, and I use this butterfly once again. I bought the weekly Twitter 40 puts. I sold 2 of the 37 puts, and I bought the 34 puts for a 45-cent debit. I bought 1 of the 40 puts. I sold 2 of the 37 puts, and I bought the 34 puts. My risk on this trade is $45 per 1 lot. My reward on this trade was $255 per 1 lot, which set me up at about a 5.5 reward to risk setup. If Twitter closes at $37 on Friday, I will make 500% profit. If Twitter closes exactly where it is right now at $38.80, the trade will be worth $1.20, which would profit 300%. Okay, so people always say to me, Andrew, what's your favorite trade? And I always say butterflies based on measured move targets. If you email me, I'll send it to you. I can send it to you. It was a great trade in Twitter. How do I decide what trades to take? And I'm here, guys, to teach you my trading plan. I have many trading plans. This is one of my favorite trading plans. So number 1, I have the Oak Ribbit and the Him Cribbit trading plan, but what I want to talk to you guys about is the CRRBTT of the trading plan. Number 1 is the chart, okay? Bullish, bearish, or neutral. If a chart is bullish, I want to stay long. If a chart is bearish, I want to get short. I know personally, I have lost money this year, and it's been on weak-looking charts, okay? I'm trying to buy calls in Caesars. Or I'm trying to buy calls in BRFS. Trend is your friend, guys. Whatever technical indicator you personally use, trend is your friend. I personally am a big fan of the Ichimoku Cloud, but you guys can use any charting you want. But remember, trend is your friend, and you want to trade on the side of the trend. All those growth stocks, I would not be long of any of them right now. I don't think the trend is over just yet. So always look at the chart. Number 2, some people like rest and relaxation. Not me. I personally hate rest and relaxation. What do I like? I like risk and reward setups. So the difference I say all the time between a good trader and a great trader, good traders always think about how much money they can make. I am a great trader. I say if I am wrong, how much money I can lose. So R&R does not stand for rest and relaxation. It stands for a risk versus reward setup. How much are you willing to take on a given trade? It does actually not matter if you're right or wrong. It just matters how much you're willing to risk. A percentage of your book or a dollar amount, okay? So you can look at it as a percentage of your total book, or you can look at it as a dollar amount of your book, okay? So risk, how much are you willing to risk? Reward, how much do I want to take it off, okay? Where are my price targets? I had a trade on Twitter. I thought I was going to get more for my trade today, so I didn't take it off. Always set up proper reward to risk setups. If someone said to me, Andrew, I'm going to give you $1 million right now, and I want 95% of my trades to be winners, I would say simple and easy. I would sell a dollar call spread for 1 penny. But that's not a proper risk versus reward setup. We used to have a guy in our trading pit. His name was Paul. And he would say, we'd buy calls. They'd go, how are the Apple calls? We would go 5 to 520, 200 up. They'd sell them at 5. He'd try to sell them for 510. Stock goes down. They can go to $2. Okay. So he's trying to make 10 cents and willing to lose $2. That's not a proper reward to risk setup. So whatever you're trading, guys, know how much you're willing to risk on a trade. It can be a percentage of your total book, or it can be a total dollar amount. Then I do love tacos and tequila, but what's more important than tacos and tequila is time and target. How much time are you going to give this trade? Know when it is over, okay? Every single Thursday, I exit a lot of my positions, but always know when you're wrong, okay? And as a man, I know the hardest thing for me to do is admit that I'm wrong. A lot of times I click my mouse, I say, I'm sorry, you're right. I was up $20,000 yesterday, and I went through my positions. I said, what positions do I not like? Okay, I personally don't use stop losses, but what positions do I not like? And if I don't like a trade, one click of the mouse, I can go from long to short, short to flat, and flat to long. So simple and easy, okay? Always have time periods. Always have targets. How much are you willing to lose on a trade? What time period, okay? Weekly options. You should probably give yourself a couple hours. You know, if something's May expiration, maybe a couple of days. June, maybe a couple weeks. If it's something September, maybe a couple of months, okay? Every expiration, you should have a different time and target. So as much as I do love tacos and tequila, time and target is much, much important. And this has been my trading plan since I left the trading floor. I was a very successful trader on the trading floor. I made millions of dollars on the trading floor. I'm not going to lie. When I came upstairs and started trading upstairs, I was not profitable at first, okay? I was just like you guys. I was in stage number 3 where I lost a little bit of money, okay? I didn't get crushed, but I just didn't make money. And this is when I came up with my trading plan. I thought of everything from the trading floor and how I can tweak it to consistently become a profitable trader. Now, I know I make money. Not every day, maybe not even every week, but every single month this year I've made money. I don't think I've had a losing month since last July, okay? So we need to fight back now, and remember that in order for the market maker to keep making money, they need customers. So we're going to start taking money back from the market maker, and I gave you one of the ways to beat them at their own tricks. We have a special topic course. It is tomorrow night at 7 p.m. Okay, it's tomorrow night at 7 p.m. I'm going to teach you how to use call put sentiment to understand, determine investor sentiment, okay? Let me just put the link in here. Okay. I will also teach you market maker targets for iron condors. Learn the best time and day of the week for credit and debit spreads. You can't always be a credit spread trader, and you cannot always be a debit spread trader. I'm going to show you the chart, and I'm going to teach you guys the best day and time of the week if you're going to be a credit spread trader or a debit spread trader. Learn when and why to trade credit and debit spreads. And my favorite, everybody's favorite, is learn how to potentially profit 600% in the option market in the course of days, guys, okay? I'm going to teach you guys that. Ooh, that's not the right link. It's the second one. It's not more secrets, sorry. It's keenonthemarket.com/market maker. So this is tomorrow night at 7 p.m. It is only, we'll let you go to the next one, $97. So you guys can sign up at keenonthemarket.com/market maker or give us a call if you have any questions. It's 312-261-5581. Okay, I'm going to say 4 things about the workshop, simple and easy, and then if you guys have any questions, feel free to ask any question you want. There's not an option question I can't answer. Number 1, the workshop will be tomorrow. It will be live, okay? So this will be the last time we have a live workshop on this topic for at least a year. Number 2, it will be recorded, and we only have about 40% of the people that sign up actually attend. If you do not attend, you will get the recording for the lifetime, okay? You will have access 24/7 to the lifetime of the recording. Number 3, we will sell out at this price point. We'll raise the price on our website to $197, so we will sell out at this price point. And number 4, which is the most important thing, I live by the sword, die by the sword. 100% money back guarantee. So if you're not happy with the course, we will give you your money back. So it's pretty much a no-brainer, guys. If you trade options at all, from Option 101 to Expert Trader, it's 7 p.m. Central Standard Time. 7 p.m. Central Standard Time. And it includes a 10-hour recording. So it includes a 10-hour recording, guys. It will be 4 hours of me trading live, today's free webinar, and then also the workshop tomorrow. So 10 hours of recording, $97, 100% money back guarantee, because I guarantee you guys will learn a lot if you trade options from beginner 101 all the way to expert. And if you guys have any questions, I'm here. Let me know. If not, we're going to get called a wrap. I had a big position on T-Mobile and I sold it today and the stock's up $3, so I'm very upset right now. T-Mobile. I love that stock too. Does anybody have any questions at all? Does anybody have any questions at all? So this will be a live workshop after this, then it will be recorded, and we will sell the recording as well. The other hours of material is about these other strategies. Yes, so the 10 hour, it's an 8-hour recording. What it will include, number one, it will include this recording. Okay, so we'll give you this recording. We'll give you the 2.5-hour workshop that's tomorrow at 7 p.m. We'll go from 7 to 9:30 with live Q&A at the end. People always like to drill me with stock charts, and I love looking at stock charts. And then also, it will include 4 hours of me trading as well. You do not have to trade a day trade. If you trade options at all from option 101 to expert, then you will, make money on this. This course is for you. If you trade options from option 101 to expert level, you should be fine with this course. And worst comes to worst is you take the course and you don't like it, I'll give you your money back. We had about 6 people that took our last course. There's about 500 people in there that asked for their money back. These are courses, try to be the best in the industry, and we like to give people the option, if they don't enjoy it, to give them their money back. It works for any kind of option trading. You trade any kind of option that makes sense. How often do I hold positions for? I'll hold positions a couple hours. I'll hold them for a couple days. I'll hold them for a week. I'll hold them for a month. So it just depends on the position. I have a Spirit Airlines position that I'll hold for months if I have to. I'll take a trade off. I made $3,000 in CP today. I made $3,000 in Tacero today. So I'll hold a position or I'll take it off. I have no problems doing either or. Do you offer strategies that combine options and futures? Well, not really. The course is going to help you in any option trading. So that course is going to help you in option trading, but we don't offer anything that's a combo like a signals or an alert or anything like that. But the course will help you with any options trading. All right, thanks a lot, guys, and I'll see everybody in the workshop tomorrow. Make sure you guys sign up. We have a limited amount of spots. It will include the recording, 100% money back guarantee. It's www.keenonthemarket.com/market maker. Thanks, guys, and I'll see you in the course tomorrow.
Thank you, Andrew. It's great to have you in our webinar room. We really look to have people in here who have great experience, and we try to deliver speakers to our users who are really looking for some an inside track to give them something to really help you with your trading. I think we all got that today. We definitely encourage you to sign up for the training. Sounds like they're willing to put their money where their mouth is and offer you a guarantee on it. So go for it. Sign up for it and continue your learning and your education, and hopefully we'll be able to get Andrew back into our room again in the future. Thanks for everybody taking some time today with us. Best of luck in all you're doing and all your trades. We'll see you at the next webinar. Take care.